Warren Buffett is one of the best investors of all time, but he's not traditionally known for investing in technology or really tech sector at all. This has changed in the last couple of years. In today's video, we're going to be covering a company that has a really big position, and Warren Buffett did take a really big position in a technology company, which you might not think or might not poise as a technology company, putting billions of dollars into this one specific stock. Now, me personally, I don't invest in one specific stock. I would rather have ETFs. I would rather have exchange traded funds, which trade in a bunch of different places. But the one that is screaming by for investors, including Warren Buffett, with artificial intelligence is Amazon. Like I said, not traditionally one that you see, but when we start breaking this down and looking at the company, most people don't think of Amazon as an AI company, and a lot of them don't even consider it more of a tech company. But when you start looking at the AI revolution and what we're seeing, so in 2006, Amazon launched a new division, Amazon Web Services, or what they call it, AWS for short. It is the first division that really looked at internal e-commerce operation and efficiency to scale this globally. At the time, a lot of people didn't think it was possible, but they knew this solution would also be needed for scaling cloud computing, which is what we're looking at. When you think of the big names, when you look at Nvidia, when you look at all of these larger tech companies, cloud computing is massive when you look at these larger institutions. Today, the AWS controls more than 31% of the cloud computing infrastructure market in its entirety. We're talking north of 30% in there from distribution, computing, and storing of big data metrics. This is the reason why a lot of these tech companies are building literally nuclear power plants to power the cloud computing and essentially the energy consumption that they're going to be required. But when we start looking at cloud computing with Amazon, it caters to the massively growing market of this cloud computing. AI and machine learning, combining those both together, has a very large model when it comes to building this out. There are also mathematically trained fed systems that put information into the AI platform. And this is an article that they covered on the Money Fool. And I really want to cover it because there are a couple different articles that have been coming out lately about AI, about specifically Amazon and how they're really huge in this tech computing. Now, all of it requires a very huge amount of that computing power, which we're hoping quantum computing is going to solve in a big part as the largest cloud service provider in the world, which is Amazon. Again, not really poised and not really thought of as an AI company or a tech company. Now, when we start looking at the future growth and demand, we're looking at the capacity to rise 19 to 22% between 2025 and 2030. So in the next 5 years, there are going to be a really huge build out of additional cloud infrastructure to support everything we have without creating a very big deficiency, which means at least twice the data center capacity that we currently have, but we're going to have to build them in less than a quarter of the time. Now, when we look at the performance of Amazon, it is done incredibly well, not only in the e-commerce, not only in the shipping and everything else that they do, especially with Audible. We start looking at $637 billion in revenue, which again is kind of crazy as we continue and finish out 2024. They're doing incredibly well. Market cap, $2.4 trillion for the market cap. And they're expecting within the next 5 years to this company to be number one, to actually surpass Apple, to surpass Nvidia, and a couple other ones. And the price the earning ratios is really good. So 3.843 is what it's sitting at right now for the PS ratios in here. So does it make sense? Should you pay Amazon for the growth potential? When we start looking at the overall business model and the amount of money they are generating through AI, in 2024, the AWS generated $108 billion in revenue, comprising about 17% of Amazon's total sale, which is up $91 billion from the previous year. So when you think about just getting started in the market, which was 15%, now they're up to 17%. If they continue on this roll, then they're 19%, 20, 25%. In the next couple of years, the profit for this is going to go incredible. While it only generated 17% of the profit in 2024, AWS is responsible for 58% of the operating income of that year, which is kind of crazy. It is really the driving force between Amazon's top-notch growth and a majority of the profitability today. Now, the big reason why Warren Buffett's seeing this and why Warren, remember, a very, very well-vested value investor holding the company around 2.1 billion shares of the company, owning since 2019. And he's been adding more with the explosive demand of artificial intelligence coming soon. It seems that Amazon is going to be an even bigger company. Even when I look at the recommendations on a lot of different sources, they are saying that it is a buy, and it is a strong buy in a lot of different places. Because over the past few years, the paradigm has kind of shifted to what companies are really focused on artificial intelligence. When we start looking at market cap in these larger tech companies, it is incredible when you start looking at P&E ratio and seeing just how big they are getting. What is going to happen in the future? We know companies like Nvidia with the cloud computing are going to do incredibly well when we start looking at Apple. But again, a lot of companies seem to be overvalued based on their price and earning ratio. When we look at Nvidia, that is up almost 1,800%. That's right, 1,800% in the last 5 years. Is it going to be able to repeat that performance for the next 5 years? Most investors are saying no, they're cashing out and getting out of Nvidia and a couple other of those heavy tech stocks and putting, again, a lot more into Amazon. AI is a means to an end, and this is the way that they view it. Most companies are figuring out a way to really profit from AI, where Amazon has already done it, looking at now 17% of that profitability. When we look at the online retailer using AI to exist, to really improve the existence of what they have, but looking at other ways to add AI into essentially everything they do. And of course, like we said, those web services, very, very high in demand. Now, when we start again looking at the profitability, and this is another article again over from the Money Fool. So how Amazon is going to vault past Nvidia. So Nvidia 3.4 trillion, Amazon 2.4 trillion. So we are $1 trillion behind. Mathematically speaking, it would take a stock increase or price increase of 42% to surpass Nvidia really as it sits today. Alternately, if the price of Nvidia actually goes down, while the value of Amazon increases, you could close the gap. And of course, looking at the price to sales ratio of 3.4% in comparison to what we're seeing with Nvidia, that is where the big difference comes in. Looking at about a $990 billion difference between the two, but looking at the annual growth rate of 7%, by 2030, again, they are expecting it to surpass this because of what is going on in the cloud computing and the AI space. So should you really be putting money in it? Me personally, I hold a couple different ETFs. When you start looking at the QQQ, it has companies of this nature. When you start looking at the S&P 500 and looking at these, trillion-dollar companies, does it make sense to put more money into an individualized stock? My opinion, the answer to that is no. I would rather hold them in a whole bucket of stock, because if Amazon doesn't grow as fast as they think, or if Amazon actually takes a little bit of a step back, what companies are going to be represented within that ETF to really step up and take charge when it comes to building it out. Now, of course, no one can really tell the future when it comes to stocks, but when it comes to ETFs, we are seeing that steady, consistent growth. Even where some sectors might underperform, we know that cloud computing, digital retail, even looking at advertising, is not going to go anywhere. We're seeing it more and more and more, and there is going to be more applications when it comes to AI as we continue to grow it out. So, all right, guys, so that is going to do it for today's video. Let me know in the comments what you guys think, and as always, thank you guys for watching.